The global risk mood was strong at the start of this week, with the S&P 500 closing at a 5-month high on Tuesday. Then investor optimism was rattled once again by the latest battle in the US trade war with China. US equities rose for 4 straight days into Tuesday's New York close. But shortly afterwards, S&P 500 futures and indeed the Australian dollar tumbled on news that the US would soon announce a list of $200 billion worth of imported Chinese goods that could be subjected to tariffs. But this should not have been a surprise. As we noted at the time, President Trump was quite clear in his 18th of June statement, where he, quote, directed the United States Trade Representative to identify $200 billion worth of Chinese goods for additional tariffs at a rate of 10%. Perhaps the fixation on last week's $34 billion first tranche of US tariffs on Chinese imports left some investors hoping that the tariff threat could now largely be ignored. The bulls might yet find some relief near term, at least on the US-China front, with public comment invited on the $200 billion proposal extending to late August. And since these tariffs will not take effect until after that date, the market tension over trade could ease. Chinese officials have expressed their anger and pledged retaliation, but with annual goods imports from the US only about $160 billion, it cannot be strictly reciprocal, unlike the response to the 25% tariffs on the first $50 billion. So perhaps there is scope for a more upbeat mood to return in the week ahead. While it has been a volatile week in equity and currency markets, interest rate markets have been much steadier. Fed officials have expressed mild concern about US tariffs, but made clear that their base case is for the US economy to keep growing at a robust pace. This optimism seems to be widely shared among central bankers, with only a modest growth impact expected at this stage. Indeed, this week the Bank of Canada raised its benchmark interest rate to 1.5% despite US-driven trade battles. They said that, quote, although there will be difficult adjustments for some industries and their workers, the effect of these measures on Canadian growth and inflation is expected to be modest. Little wonder US interest rate markets priced the same outlook for the Fed as a week ago: one rate hike and a 50% chance of a second before year end. This limits the US dollar's downside and thus ultimately keeps a lid on Aussie dollar rallies. Early in the week, the Aussie rose to 3-week highs just short of 75 cents before sliding more than a cent on the Trump tariffs. It has since recaptured a little lost ground, but is not being helped by commodity prices. In particular, metals such as copper have tumbled in recent weeks, with Australia's export basket at a 1-month low. In the week ahead, Australia's domestic calendar highlights are the minutes from the RBA's July meeting, with a focus on banks' rising funding costs, and the June labour force data. Westpac looks for a 17,000 rise in total employment and a steady unemployment rate at 5.4%. This would reaffirm the Reserve Bank's optimism on the Australian economy after this week's strong readings on consumer and business sentiment. We'll speak to you next week.